This video is a follow-up to an earlier video, part 1, that deals with the various Minervini screens we have added in ChartMill and how I use the different screens to find stocks that meet the criteria and how they are further analyzed to arrive at concrete setups is covered in this video. All Minervini screens are a combination of the trend template supplemented by specific fundamental filter combinations, and the basic screens and subscreens are stored in my personal account so I can access them quickly through the stock screener page. Extensive information about the various filter options can be found in the previous video and in 2 separate articles. Links can be found below this video. The predefined screens take care of the basic selection, and whether or not a stock is held as an effective setup is purely discretionary and based on stage analysis of the stock on the weekly chart, the volume analysis, Minervini's VCP pattern, which is actually the volatility contraction pattern, and other specific classic chart patterns, mainly the rising triangle, cup and handle, high tide bull flags, etc., and analysis of support and resistance zones. So let's take a look at some recent examples. Service now is one of the results using the 2A filter. This particular filter looks for stocks that meet the trend template and in addition have the following fundamental characteristics. Earnings per share growth quarter to quarter at least 25%, earnings per share acceleration at least 2 quarters, and earnings per share surprise at least 2 beats during the last 4 quarters. Moreover, the stock posted strong quarterly results, third quarterly results on October 25th. And I found this stock on the date of November 6th, and at that time the chart looked like this. The stock has been in a long-term rising trend, stage 2 on the weekly chart, since mid-May 2023. On the daily chart, the stock had been moving sideways since June on rather low volume. At the end of October, the bottom of the range was tested again, simultaneously with the ascending 150 simple moving average. The price increase that followed occurred with remarkably more volume, and there were clear signs of accumulation. And before the actual breakout, the price moved in a narrow mini range for 3 consecutive days. Volume was noticeably lower in the process. And the day before the actual breakout, it was an inside day. The stock was finally added with an entry at 614.44 and an initial stop loss at 579.88. Since that was a first test position, the risk percentage was set at 0.5%. The Microsoft stock appeared on the radar via screen filter 2A and 2C and had the following characteristics prior to the breakout. An earnings per share growth quarter to quarter at least 25%, earnings per share acceleration at least 2 quarters, earnings per share surprise at least 2 beats during the last 4 quarters, and profit margin improved for at least 2 quarters. On top of that, Microsoft reported strong Q3 earnings on October the 24th after market close. So the stock has been in a rising long-term trend, stage 2 on the weekly chart, since late April 2023. On the daily chart, price had been consolidating since mid-August. And on September 26, the stock tested the ascending 150 simple moving average, where the previous swing low was broken downwards. However, the price recovered quite quickly and there was a shakeout. On 25 October, Microsoft opened with the gap up after positive Q3 results were published the day before, and this completed a cup and handle pattern. The following day, the stock fell nearly 4%, testing the rising 50 simple moving average. The decline occurred on lower volume than the earlier breakout, and the stock recovered quickly. The buy order, 350.12, was triggered on November 2, 2023, and first stop loss was set at 326.90. Again, the risk percentage was held at 0.5%. The most successful setup so far is undoubtedly Miomo, which is already up more than 100% since its entry. And I wrote a separate blog post about this setup, and a link to this article is attached below. Since early November, the retained setups from the screener have been monitored in a paper trading account which can be followed on my Twitter page. The stocks covered in this video are also part of it, and all 3 positions are still active. Important, monitoring is done through a paper trading account, so no real money is at stake. This serves purely to extensively test the results produced by the various screens created in ChartMill and thus has educational purposes only. Under no circumstances should it be viewed as investment advice. All new setups and changes to existing positions will be published on this Twitter page in advance. A link to my Twitter account can be found in the description below this video, and you can leave a reply there if you have any questions. Thanks for watching, and I'll see you next time.